Let's bring in our guest for the day. Sameer Dalal of Natvarlal & Sons Stockbrokers joins us now on Markets Rewind. Welcome, Sameer, on the show. Good to have you. Let's start off with the market move overall. I mean, we've seen the index at that level gravitating from a high of almost 8,000 to now at 7,700. There has been some writing support at 7,700, but from these levels, what kind of further slippage do you see? And put it in context, of course, with the heavyweight banking pack, something like an ICICI and SBI, which haven't done well, specifically ICICI for the last several sessions.
So, like you said, markets have already started correcting from a high of 8,000, but the run-up to 8,000 was also quite dramatic, right? Honestly, if you ask me, I was not expecting that kind of a run-up. I was actually interviewed on your channel when the index was around, say, 7,000. I said it was maybe an opportunity to buy. So I felt it would probably consolidate there for a while and then rally. I mean, completely caught off guard there. I still believe in the near term the markets are a bit fairly priced to slightly maybe overpriced. But then again, the nature of the market is forward looking, right? We know the numbers that are coming, some of them are negative. But let's take one step forward and say 1 year from today, what are we going to see? The market's looking at that. So there's a talk on positive monsoon. I know it's just talk at the moment, and till it actually comes, we really can't say much. But a positive monsoon means it's really good for the Indian growth. You'll see rural coming back. So that is one positive. Second positive is how the government continues the projects that it has initiated or announced during the budget, the Housing for All project. You talk about the rural infrastructure spend, the road commitments. You talk about the railway investments of 1 lakh crore per year. So, you know, the investments that are going to happen are going to be quite significant, which could drive the GDP growth for the country and which could also propel more capital investments over a longer term period. And like I said, markets are looking forward now. So when you talked about the banking space, we discussed how ICICI Bank results have been bad and the NPAs have moved up to 5% plus, and they have another 45,000 crores which could potentially become either restructured or could slip down into the NPA category. I think the markets to a large extent have factored in that negativity, right? The stock has again come up from 250 down to 215 odd bucks. It's not that all these assets are going to be written off. On one side you have Mr. Vijay Mallya just saying that I'm willing to settle for 4,000 crores. I mean, there will be more settlements like that. I'm not saying that this is a great deal. I don't want to comment on that, but what I'm saying is there will be recoveries that come, right? And as those recoveries start coming back and they are able to start deploying that money back into actual interest earning assets, that could lead to huge amount of growth. So a lot of the negatives now are known, factored in, priced in. Again, like I was talking to you earlier, Nifty need not go too far down. Why? Because the good heavyweight index companies are trading at reasonable valuations and have delivered a decent set of numbers. Yes, you might find some of the smaller weighted companies deliver poorer numbers, which could kind of bring the markets down. But I honestly don't think the markets have that much space on the downside to go below 7,400 or 7,500. I would say if the markets come there for a longer term investor, why even then, even now for a long term 2-year investor, even these levels are very, very attractive. I'd go out and buy from a 2-year perspective.
All right, fair enough. Encouraging commentary coming in there. So as Sameer is concerned, a lot of negatives priced in, but 7,400 is the worst case scenario that he sees. Fatima?
That's right, Pranoy. In fact, let's just get a bit more stock specific, because we saw Tata Motors seeing quite a sharp cut in trade today. We understand that JLR sales in the United States were disappointing with a fall of 2% on annualized basis. Let's get in Hiral. She's joining us for more on this. Hiral, weak sales clouding concern for that stock, all of that really playing out there. But give us a sense as to what is really happening there.
If you see in terms of April, JLR sales down by, US sales down by almost 2% on a year-on-year basis. If you see Land Rover US sales as well, they have dipped by almost 2%. And in terms of Jaguar, they have seen a growth of a minuscule 1% on a year-on-year basis. So the pressure point is mainly the US sales right now, because if you go to see over the last 12 months, if you take into consideration April 2015, this is the first time where we've seen a negative, we have seen a degrowth in terms of where JLR US sales are concerned. However, one thing that we need to note over here is that we are expecting Tata Motors to come up with with 2 new launches in the month of July, that is F-Pace as well as XE, on the back of which we are seeing, buyers on a, back footing in terms of purchasing anything right now. However, the demand that has been lost in this month is expected to be recovered in the next 2 to 3 months once F-Pace as well as XE are launched. And in terms of our brokerages are concerned, they are pretty much on a firm footing. We have 91 to 92% of the brokerages who have a buy call on the counter, and they have a 12-month target price of almost 449.5. So basically the dip that we are seeing in April is mainly because buyers are waiting out for the new launches that are expected in July, and maybe we see the demand coming back in that month.
Okay, Hiral, thanks a lot for taking us through all of that. Sameer Dalal, I'm going to come back to you. What's your take on Tata Motors and how worrying are the US sales numbers? Also, what's your call on Hero Moto and Eicher? They, of course, are going to be reporting those earnings later on, which is tomorrow.
So let's start with Tata Motors first. 1 month of slightly weak numbers in one particular region and the stock reacts down 7%. I think it's a bit extreme, right? I think people are focusing too much on the near term and forgetting to think about maybe the larger and the longer term picture. So I am actually positive on Tata Motors to start it off with, and I do believe that the Land Rover brand that is there is considered one of the absolute premium brands of the SUV category, and I do believe that sales for that category, Land Rover, is going to continue to see an upward movement over a longer term period. So I'm not too concerned with 1 month. Now, yes, if for 3-4 months we see continued stress maybe in 1 or 2 regions, and then I might have to re-look at it, but at the moment I'm not having a re-look at that. Second, coming back to Tata Motors, the Indian operations, what you mentioned earlier is, the new launches coming in. I do believe that also is going to be a good game changer for them. The cars are being priced well. What I hear is that the test driving and all the the reviews that are coming out on the cars are quite positive. Now you have to just see whether those reviews actually lead into demand for those cars. The problem is the brand in India has taken quite a bit of a hit. So it'll be about reviving the brand there. So I think they're taking some of the steps that need to be taken to kind of ensure that some amount of picks up. But that's again a very small component. The biggest focus for them and the biggest profitable angle for them is Jaguar Land Rover, and I'm still believing that's going to be a good option. So I'm quite bullish. I think the stock has more legs on the upside. This is a correction, a good opportunity to buy it. Now, you discussed Eicher Motors and Hero Honda. Eicher Motors is kind of in a league of its own at the moment. They're growing very, very well. The kind of bike that they're making and the kind of price point that they have is quite something which is very limited competition in that space. So I do believe they will continue to do well, but we have to factor in one thing. The base has become a lot bigger. So, when we were seeing 50% growth and 60% growth in the sales volumes, those kind of numbers need not come again. So the market needs to kind of adjust itself for lower growth volume. So valuations are expensive, and I think maybe the upside in the near term could be capped. So wait for corrections on Eicher. Hero Honda, valuations are fair. I still think there's a lot of room for sales of the two-wheelers in the Indian market. Hero Honda has been able to capture back some market share. They're expanding internationally. I think they'll have some good growth there. So again, positive on Hero Honda. I think there is more upside, so that's something I would be investing in at this point as well.
Alright, so that's about the auto space. Let's focus on metals then, and cyclicals, of course. We have seen quite a bump up as far as metal counters, and let's segregate into two. I mean, you have your steel counters as well as industrial metals, base metals. We've seen a bump up in both. There has been positive news flow, prospects of earnings, and especially the operational performance improving for your steel companies after the safeguard duty and the MIP imposition. There have been price hikes as well. I mean, it's not all talk and no show. Even in terms of industrial metals, you have zinc, which is better placed, copper, aluminium spot premiums have possibly bottomed out 2 quarters back, and now you have Vedanta that has come up with an improved profitability on the aluminium front. Do you see things materially improving, or are metal counters, specifically, separately, steel as well as your industrial metals, you would exercise caution at this point?
So given that the stocks have run up, I would exercise some amount of caution. So let's talk first a little bit about steel. And I've discussed this quite a bit on your channel in the past as well, that commodity cycles are longer term in nature. I'm not denying the fact that the bottom could have been formed, so we may not see metal prices, steel or aluminium or copper, go too much below what had, or even come back to the same level that it had gone to when the crash was happening. but it's going to be a prolonged period of lower commodity prices, right?
Lower for longer.
Lower for longer, because as prices move up, you'll see more supply which had gone out of the system because of unviable production coming back into the system. It might take, maybe 1 quarter for these companies to say, look, let's see these prices sustain before we start our blast furnaces. But if they do sustain for that 1 quarter, they will start their blast furnaces. So again, you're going to see an oversupply situation. So I'm not very bullish on the steel space for the next, say, 6 months to even maybe a 1.5 year period. The Indian steel industry has got a big benefit from MIP. July it ends, but let's assume that the government, to protect these companies, continues to do it for another 6 months. For the near term, I think maybe the Indian steel companies will not be as badly affected. But what that does is it makes Narendra Modi's Make in India plan quite toothless. It's like sending in your army into a gunfight with knives. All the raw material for you to export the finished product of steel is more expensive than getting it from a Chinese company or getting it from somewhere else where the MIP was not there. So I'm not very, very happy about the fact that MIP is there. But yes, it's there, and for the time being, steel companies in India are protected to a large extent. So may not see too much negativity, but don't expect too much positivity. So I would not invest in that. Coming back to aluminium, zinc has done well. Zinc is supposedly not in as much oversupply as maybe some of the other commodities, so maybe there's some upside there. We need to see if the prices can sustain, and the other base metals, like I said, have also kind of formed a bottom, so maybe a little longer period. So I'd look at all of them, maybe 6 months down the line I'd review it again.
Alright, fair enough. Lower for longer, and some caution at these levels, both for steel and something like industrial metals. That's the word coming in. Fatima?
That's right. In fact, Sameer Dalal, making some of those points that are going to be resonating with this next conversation that we're about to show our viewers, because it has been a roller coaster ride in equities and commodity markets. Here's the commodity guru, that's of course Jim Rogers, who believes that India will not be able to escape the global turmoil despite having the best central banker in the world, who he calls Raghuram Rajan.
India is not going to be able to escape. If markets and economies continue to go down, which I expect, India will not escape. We're not going to be finished with a downturn anytime soon. No, it'll certainly go into 2017. Well, I'm short the United States. I'm short the stocks, the NASDAQ stocks, which never go down. The Amazons, the Apples, those stocks that nobody ever sells except me. That's where the most excesses are in the world stock markets that I see, and that's where I'm short.
All right, so that was Jim Rogers. But moving on to our domestic markets now, Adani Ports, that was one counter that saw a severe beating today, and despite no demons being there in the P&L, they've clocked in a strong quarter with a 38% growth in the bottom line, but the stock is far from floating, and it was quite evident in today's session. Citi has downgraded the stock to neutral. This is largely due to a sharp increase in net debt and loans and advances, and essentially the concern is that since possibly Adani Ports can source loans and advances at more appropriate tenors and cheaper costs, there's possibility of related party transactions, and that being extended to related companies and group companies as well. So that's one of the concerns that's been an overhang, and there has been a sharp increase in loans and advances between the period of September 2015 and March 2016, which has been a little unexpected in that regard. Also, the finance cost in that regard will also be something to watch out for. Sameer, for something like an Adani Ports, we've seen a big correction today, but in terms of the earnings and also in terms of the guidance, there are no real demons there. Your call?
Actually, you're right. There are no demons in that. So I guess we got to wait to get more details on what exactly this loan funding and how, for what purpose it has been done, right? It could be maybe a short-term funding which is there, and if it's just a short-term thing which gets reversed really quickly, then that gets negativity gets removed. Now, if you ask me, Adani Ports is actually a great investment from a longer-term point of view, given that they control operations of so many ports. If India's GDP has to grow, if the global economy is reviving, which everyone believes could happen in the next 3 years, your global trade is going to increase, and Adani having so many ports and having utilization levels low, which could increase, could lead to great operational leveraging. Profitability could increase quite a bit. we just have to keep an eye on the debt figure. We have to ensure that that doesn't go too far out of whack, which becomes uncontrollable even at a later stage. And also what we have to see is that he doesn't over leverage, trying to grow so fast that if the cycle were to turn negative, it comes to bite him again, which we saw in the likes of GVK, GMR, who expanded too quickly. So barring that, I think it's a relatively good business. It's got moats around it. Not easy for people to get into this kind of business, given that you need a lot of clearances, land, money. So it's got some moat, and I think that's something people should keep an eye on. Right?
All right. Story is positive, but debt remains to be a concern and something to watch out for. Thank you for joining us, Sameer, on this show today with your market view as well as stock-specific view. Up next, we have Parag Milk Foods. The IPO kick starts today at a price band of 220 to 227 rupees. We get you a word from the management on the other side of this break.